So, good morning, Kevin O'Leary.
Morning, how are you?
Good. How are you today?
Great, thank you.
Excited to talk to you about Bitcoin. I guess my first question would be, what has changed for you since you first found out about Bitcoin to today?
What's changed for me is the regulatory environment has changed. When I first got involved with Bitcoin, in most jurisdictions, in most geographies, back in 2017 when I bought my first coin, between 2017 and 2019, you had to act in the shadows. If you were involved in fintech, as I am, or involved in financial services companies that index, for example, I'm involved. I have a lot of my companies I invest in are highly regulated. And at that time, the regulator was not in any way supporting anything crypto, whether it be Bitcoin or anything else. And so what happened was a change in the regulatory environment in countries like Switzerland, Germany, France, Japan, Canada, where the ETFs emerged first, Australia. And then it became safer to come out of the closet, so to speak. And, for me, I've always been, I have a wide, diverse holdings of different asset classes, and I wanted to start expanding into Bitcoin as I would with gold. I have a 5% weighting in gold in most mandates. I saw no reason I couldn't increase that to in Bitcoin, and I've gone way past that now.
So, the way I see it, Bitcoin offers an unforgeable final settlement about every 10 minutes with virtually no maintenance cost, on top of being terminally scarce. What does the US dollar offer if we're comparing them as assets or even as currencies?
So, you make a great point, and here is the comeback to that point right now. The reason I own Bitcoin is I am of the firm belief, and we have to take this, I talked to lots of institutions and sovereign funds. I just this morning was reviewing this very topic with a very large entity in the Middle East, a multi-billion-dollar mandate. They do not own Bitcoin right now for one singular reason. Their compliance department is not on board yet. And therein lies the opportunity, because as time changes and it gets more adopted, just like the US dollar became the fiat currency of the globe, it took 100 years. Well, it's going to take some time before Bitcoin becomes the same. It's going to, what's going to happen, in my view, and you have to make this decision as an investor. You have a binary decision. Am I going to own Bitcoin or not? A or B, on or off. Once you say, I'm going to, then you have to get your compliance department to allow you to, and that's where there's a massive roadblock occurring for billions of dollars. Once you get the approval, and then it's how you own it, where you own it, do you consider it a currency, do you trade it, or is it a hard asset like real estate? All of these decisions. The reason I own Bitcoin now is one singular reason. I believe over the next 5 years, it will be allowed to be purchased by large institutions, and that demand, in addition to the scarcity, is going to drive the price up.
So when we talk about that scarcity, the way I see it, Bitcoin's the only terminally scarce auditable asset in the world. And the demand, the issuance of Bitcoin is totally divorced from the demand. So when you have an asset like that, it makes me wonder why people would bother seeking refuge in something like real estate or gold, really anything else. What are your thoughts on diversification if you have this
Well, the
great asset?
classic, yeah, I mean, look, the classic institutional diversification metric looks like this: no more than 5% in any one stock or bond, no more than 20% in any one sector, and generally somewhere between a 50-50 to 70-30 ratio between equities and fixed income. That's been the classic for 100 years. The debate raging right now around Bitcoin, is it a security, which would mean in the traditional mandate would be maxed out at 5% of, let's say, a $5 billion mandate. That's a typical mutual fund. Or is it in fact a sector? In other words, and this is where I think it really gets interesting. There are 11 sectors in the S&P 500, including real estate. Many managers globally would never own more than 20% in any one sector. I believe that Bitcoin, and then you can debate whether it's all cryptocurrencies, but Bitcoin specifically should be considered the 12th sector of the S&P, which would allow mandates to own up to 20% of their portfolio in Bitcoin. Or you could argue crypto. But my point is, it has not been deemed yet as a sector. We're way early on that. But in my investing head, I'm considering Bitcoin, which is the granddaddy of all cryptocurrencies and the most sought after by institutions. It's a sector. It's not a stock.
So my question then becomes, does that sector consist of other cryptos, or do you understand there to be a fundamental difference between Bitcoin and these other cryptos, which to me operate something more closer to a security?
Well, you've brought up probably the biggest debate of the day, whether level one chains, whether NFTs should be considered the same in an investment mandate as Bitcoin. They are different. There's no question about it. And it's really going to be determined by the compliance departments. And we're talking institutionally now. I mean, individuals can make their own decisions, but the real money, the real potential for Bitcoin going past 100,000 and beyond is to have the traditional mandates start to allocate, whether they consider it a 5% weighting max or a 20% is open for debate. Now, what else gets thrown into that pot won't actually be their personal determinations. It will be deemed by the compliance departments who will take their lead from the regulator. And so as we have these debates about USDC, or we have these debates about stablecoins, we have these debates about NFTs being art or a security, or all of these debates yet not determined, it's really going to be at the hand of the regulator that these get allocated. But right now, going back to Bitcoin, there is no other asset in crypto that is more in demand with institutions than Bitcoin. And I believe they will not treat it as a trading instrument or as a currency or as a payment system. They will use it as an asset over time to beat inflation. That's my personal opinion.
Yeah, I agree with you there. My question becomes, at what point do investors on a personal or institutional level forsake the dollar because it doesn't have holding power? Is there a point in Bitcoin adoption where you see maybe yourself ceasing to consider trading out of Bitcoin?
Well, if I was going to do that, I would start to have to think about Bitcoin being a payment system, a global payment system. Now, that is not the way I'm investing in Bitcoin. I've never traded any of my coins. I have them all, and I would never sell one of them or any part of it. I may stake them, which I have done, but I would never give them up. And so it's a little different. Now, maybe the way to answer your question is to say, I have a large allocation of coin now, and I stake it and I produce USDC with it, and I can use that as a payment system. So it's really about, how do I pay my taxes? How do I pay my employees? How do I pay vendors? And so a world where it's all Bitcoin is going to be difficult when there's people like me that actually don't want to ever sell my Bitcoin. And that's kind of where you have this yin and yang debate about what is Bitcoin. I argue it's property. I own it. It's unique. It's scarce. It's getting scarcer. I'm never selling it. And so half the world is in my head, and the other half is saying, no, this is a fantastic, ubiquitous, decentralized payment system. And that's a different argument. It doesn't mean it can't be both. It's just as the rarity increases and the cost of acquiring it goes up, I think it challenges more, it puts more pressure on the payment system strategy than it does just the hard asset. So that debate we can have till the cows come home. But the idea that I'd ever give up on a coin I was awarded or I've purchased, never.
I'm happy to hear that. So if we take institutional regulations, let's say they're going to go our way and open up over the next 5 or 10 years, do you think we'll see gold, housing, and stocks have a large share of, their market stolen by Bitcoin?
That is a really interesting question, because at the end of the day, the manager seeks one thing above all: performance with the path of least resistance and risk. So it's really about what you think the performance of Bitcoin will be vis-a-vis the USD versus all the other options managers have to invest in. And so it may outperform, but it will certainly never be the only asset they own because they're forced by diversity mandates. And it's great we're having this conversation, but I can attest, because I deal with institutions every day and foreign governments. You know, I advise some of them in various jurisdictions about, you know, crypto and investing and private equity and venture capital, that sort of thing, as an advisory role. I'll just say this: the demand for Bitcoin is insatiable at the management level, at the institutional, you know, investment advisor manager level. They want to allocate a minimum of 1%, probably up to 5% overnight if they could. The only thing holding them back is their compliance departments. And that's why, you know, we need to resolve, we need the regulator, we need the standardization. This asset's not going anywhere. It's here to stay. Everybody knows that. And it's just now a matter of turning up the spigot and allowing those that are managing capital to allocate to it for performance reasons. It's all about performance. People are buying it with the assumption that over time, the rarity and the demand will continue to increase, supply and demand, and it will outperform other assets. That's the basic investment premise.
So what then are your hopes for Bitcoin generally?
What I'd like to have resolved is this ESG issue immediately, and the initiatives there, and I'm involved in some of them. You know, mining Bitcoin can be a very sustainable activity because it forces you to find the lowest cost, most sustainable energy. And so all of these projects going on in Nordic countries, up in northern Canada, in West Texas, I would argue are very good for the energy grid. And because a wind and solar plant, you know, that could be built in some of these facilities could also share some of its power with the local community. And Texas would be a local community that was just tested by, you know, some very bad weather that pull its grid down. So I would argue that, and it's true now, that Bitcoin miners and data center operators that are coming into the state are doing it with sustainable metrics around power generation. That's important to get out to the institutional world, that not all Bitcoin is mined using coal-fired electrical generators. That's just not true anymore. And yet it's got a bad rap. And one of the reasons it doesn't get through sustainability committees at institutions is that you know, we talked about that at Bitcoin 2021. That was a huge issue then. It remains so. Part of the problem is the Larry Fink letter, which is the largest asset manager in the world. The ESG sustainability mandates fit into that. Select against Bitcoin a little bit. And we need to resolve that issue. And it would be great because I'm sure many of BlackRock's government and institutional clients would like to buy Bitcoin, but right now that question is a question mark because they really haven't seen that issue resolved yet. And so, you know, one of the ways an institution or a foreign government could invest in Bitcoin would be to actually fund the development of a data center and a mining facility that is mining sustainably. And the coins get awarded and they just never sell them. It stays on the balance sheet of the company. That's the way I think we can resolve this issue. I think there's a lot of initiatives in that area. I know I'm involved in one, so there must be others doing the same thing. And that way I can own the coin without anybody claiming that I have not stayed within the mandates of ESG and compliance.
Yeah, that sounds like a great solution. I think the market will show people how Bitcoin seeks the cheapest energy source and how it tends to be hydro, nuclear, something renewable and sustainable. What is your end of the year price target for Bitcoin?
Well, there's a big buzz in the community about 100,000. You know, the person that's going to determine the price of Bitcoin at year end, December 31st, is going to be the regulator. The more open they get to all cryptocurrencies, specifically Bitcoin, in other jurisdictions as well. I mean, we've seen how the Canadians have really opened up that market, a lot of initiative, a lot of development, a lot of technology going on there. in expanding offerings in Bitcoin, particularly around the ETF wrapper. But the more that happens, the more the demand will occur. So I believe that any kind of positive signal from any regulator anywhere inches up the price of Bitcoin. We've seen it here in the 60s. It's just waiting to get that confidence at the institutional level that the regulator's not going to do something drastic. And I don't think they are, because they want innovation. And there's I've said this countless times, the hottest hands over the hottest keyboards are in the Bitcoin community. The best developers in the world are there, because that's where the opportunity is. And so why would you want to stifle that innovation at the federal level, at this regulator level? I don't think they're going to. They're just going to take their sweet time. And it's like a coiled spring. That's what the Bitcoin pricing is. The minute the regulator approves the asset, Katie, bar the doors on price.
I like that. My final question is, do you have any advice for people curious about Bitcoin or just getting into the space?
You know, I really advise them to explore this asset. And the way to do it is start small, start to understand the platforms. Are you going to buy it through a centralized wallet? Are you going to decentralize? Try all the options, learn by experience. It goes back to when we started our conversation. It's a binary decision. I'm going to own Bitcoin, I'm not. More and more, the answer is yes, I'm going to own it. Then it's how much am I going to own? And the thing about Bitcoin is you need to learn how to work with it. A lot of there's many different ways to approach it. There's many different ways to own it. I encourage everybody. I mean, my 25-year-old son is completely adept now at all of the ways to own Bitcoin, all the ways to trade it, all the ways to own it, all the ways to stake it. He is the next generation. He did it on his own. He's never been in a bank branch. He's never gone into a bank, doesn't know why he would. And so it's sort of Gen Z and millennials and now baby boomers are all learning. They make mistakes. I mean, I know people have lost their coin, but they did it on a small basis. And they don't make that mistake again. They create awareness of how to do it. So I think it's a wonderful universe. It's a fantastic asset. It's a must own if you're an investor. And then it's about how you do it. But it's all about education. And the good news there is the community provides a tremendous resource online. You can spend just 3 or 4 hours and you will become, quite knowledgeable on what Bitcoin is, how it works, and how to own it.
Yeah, I think that's great advice. I really appreciate your time, Kevin. Thanks for talking to me today.
Take care. Thank you.
Yep.